So let's take a look at Monday's trading in crude oil. So here's Monday's trades. Now we're looking at a 5-minute chart. I'll show you a tick chart in crude, but frankly, the 5-minute chart is pretty good in the crude oil. I don't know. That's what I trade. I trade a 3,000 tick on the S&Ps and a 5-minute on crude. I don't fool around with tick charts on the crude market, but I'll show you crude in a tick chart. And this has standard volume for those of you who don't have the Weiss wave. You don't have to have the Weiss wave. You can still read it, but I think that the Weiss wave does make it a little easier to read. And if you're interested in getting it, I'm not trying to sell it. It's available off of our site. You can buy it from us. So here we go. We open up the morning on crude oil last week with a beautiful upthrust. You can see that in the overnight we had a swing high put in. This is a nice little indication of shortening of the thrust. As we go up, we keep making smaller pushes up. We're not going up higher. This is an indication of weakness or a sign of weakness. And we call it shortening of the thrust in the waves. We can also have shortening of the thrust in the price action. I'll show you that. But for now, that's just shortening of the thrust in the waves. And so we put that swing high in, then the A, then we react down to B. Notice, by the way, the pulse, rest, pulse, pulse, rest, pulse, right? It's occurring all the time in the market. So we come down to the swing low at B, and then we come back up. Now, here at bar 1, we push up and then close underneath. So there's our entry. We would enter on that. And then bar 2 closes above it. Our stop is going to be above bar 1. Bar 2 comes back down and closes lower. If we didn't get short on bar 1, then here's a great opportunity to get short on bar 2. This market kind of fools around up in here and tries one more time on bar 3 to push up, but instead closes lower, and you can see that that's weakness here. That price action in here where you have these little top tails, if you will. We try to go up and then close low. We try to go up and close low. We try to go up and close low. That is serious weakness, a sign of weakness in its own right here. And so we come down a little bit, and if I recall correctly, I think there's a little bit of volume coming in. We try to rally up. Again, on bar 4, we come up to the line of the swing high and close off of the high. Bar 5, the same thing, closing off the high. And then I guess this would be bar 7, I suppose, right? We try to come up and then close way low down here. This is a test of the upthrust. Okay, this is a test of the upthrust. And then the market moves down with some alacrity after that, as is typical in an upthrust. Now, the target for an upthrust, we haven't really talked about that. The swing low, we're looking for a drive below, somewhere below the swing low. Now, that's not real definitive, but it's telling you that we want to at least get through the low here and a push down below. And that's indeed what happens here. You know, you could put a little trend channel on here if you want to. You can look at the price action down here. As the volume starts to come in, that price action, we're not moving down as far here. This is, in fact, this is shortening of the thrust in the price bars. Each price bar coming down is making smaller and smaller moves to the downside. Do I ever use line charts versus bar charts? Nope, I never do, Danny. So now, notice that we have a pulse down off of the upthrust. Volume increases to the downside. It's not as crystal clear as it is on the Weiss wave, but you can certainly see that volume is expanding as we move down. That's pretty clear. And the price action is pretty negative here. So as we come up, back up into this area here, we are setting up I'm not actually sure what you would call this. Is this the first lower low? Probably this is the first lower low, because this isn't really a swing in here. But again, it's based on the same pulse, rest, pulse kind of idea. and we come back up into this area, and yeah, this would be the first lower low because we're coming up higher than what you would expect if this were just a regular sweet spot in a trend. That would be, it would be, your price action would end in here, and it's gone up above that. And in fact, it started to end in here at A, and I remember this trade. I shorted it in here, and I did have a stop in, and I got stopped out on the way up, and then got back in here at bar 9. So I gave up a little bit because of that, but I could tell that as we go up here to volume is coming down. Bar 6 is interesting. You can see that we've got overlapping bars here. We're coming up, but it's not really strong up. And then suddenly bar 6 is like it just pops its head up. Volume swells. We get a sudden pop in volume, and the close is poor. Well, that's a little climactic action. That's a little buying climax up in here. It's a minor one, but it's one of the nice things about a regular standard bar chart and bar volume is that you can see that a lot clearer. You can see it on the Weiss wave, but it's not as clear as it is on a standard volume chart. So there's a benefit to that. Then the volume falls off. We get 2 bars here that really reflect no further demand, and then the market starts to fall here. And again, we have this way to measure. We can do a measured move, or we can draw in trend channels, and either way we're going to get out somewhere down in here when the price action starts to hold in here. And also we can see some shortening of the thrust in the price action down in here as well. We're making great strides down here, and then suddenly we're not making much movement down at all. And the price action is closing on the highs or off the lows in here, suggesting that buying is starting to come in to this market. Also, the volume is starting to dry up as we go lower. So we're seeing no further supply down here. So B is the last point of supply. You could look at it that way, yeah, in this instance. What's an overlapping bar? Well, an overlapping bar, here's good examples. You can basically draw a line through, and you'll hit most of those bars. You can draw a line through this and hit most of those bars. Overlapping also indicates that we go up a bit, and then we have a deeper pullback. We close back inside the range of the prior bar so that the bars are over the ranges of the bars, range being the distance from the high to the low. They're overlapping even though they're going up. There's a lot of overlap between the ranges. So this is going up, but they're overlapping quite a bit. They're inside, they're frequently inside the range of the prior bar. Okay. So then indeed, I did call this first lower high. That's good that I remembered that. Frankly, it doesn't matter what you call them as long as you can see what's going on, right? That's what you really want to be able to do. What we label them is really not important. So again, it's the same thing, just in reverse for the first lower high. The uptrend is ended. The demand dries up. Any uptrend line breaks. Price drops below the last swing low. Supply is going to be strong. If there's been a congestion area, and in this case there was, right? This is a nice congestion area. That breaks. This is a plus. Then we have a weak rally. Price bars overlap, or the upflow is poor. We have light to modest volume. And again, it can go further than a typical trend reaction or do some funky kind of stuff. And in this case, we would have expected at A to be that would have been the end, and it does a buying climax instead. And it, it kind of it's a bit disruptive. And the entry and exit is the same as for other trades. You can do the price line, trend line break. You can do the price action, or you can sell stop the low or the second bar low to the back. Did you say that measured move is a component of mass behavior? Yeah, as opposed to trend lines that are market structure. Well, market structure is mass behavior. You know, it's the crowd goes to a level, typically overshoots how far it goes, and then it has to pull back, the reversion to the mean, to kind of check out its center or its core, and then it drives further, usually again overextending itself. It's why trends go farther than you expect them to. So measured moves are just a way to scale or measure mass behavior or trend behavior. And, you know, either a measured move or a trend channel works well. You don't have to, you can use either one. You don't have to use both. Sometimes trend channels aren't easy to put in, and sometimes you got to change them around a little bit. So measured moves can be helpful when you're in that situation. Both are useful. Both are useful. So that's the first lower high trade setup.